Great. So, yeah, welcome everyone. This is our sixth event in the PMs Tackling Climate Change series. This time we're changing things a bit. We're doing a workshop, and just kind of give you a bit context of the series. This is a series made by the PM community at Work on Climate. Work on Climate is an action-oriented community focused on enabling more people to work on climate problems. The goal of our events here is to kind of like provide you with tools and resources to help more people to work on climate, to make that transition, but also for those who are already working on it, to kind of like give them the tools to be more successful at their jobs. So just kind of like set expectations. The format of this event will be a workshop, as I mentioned, and it's going to be interactive. So, you'll be engaging throughout, but we'll also have a Q&A session at the end, followed by a networking circle. And we'll turn off the videos. So we'll turn off the recording so everyone can like introduce themselves and really get to connect with the audience and the members. So I'll start first. I'll introduce myself, and I'd love for Chi and Bruce to go next. So hi, I'm Fadi. I'm a product manager, and I'm currently calling in from Canada. I've been part of the community for about 6 months now, and it's been an amazing ride so far.
Yeah, thank you, Fadi, for the introduction and starting off this event. Hi, everyone. I'm so glad to see everyone here. My name is Chi. I am currently an intern in Recruitment and Activist Global. I'm also one of the co-organizers for PMs in Climate, and also one of the hosts for today's workshop along with Fadi.
And hi, folks. I'm Bruce Strong, and I guess I'll just jump in. I'm a product manager for Capital for Climate, and let me go ahead and share screen. So, super excited to be talking with you all, and I figure I'll be able to get some good tips on our product management from some of you. I think you've been doing it longer than me, so I'm happy to learn from you all as well. So today I'll be introducing you to a little bit about what Capital for Climate does, just to give you context, and then talk a little bit about what I bring to the role of product manager and how I came to work on climate. Fadi and she asked me to talk a little bit about myself, just to provide that context. And then I'll talk about how I manage the opportunities and challenges facing the organization as its product manager. Fadi mentioned that this will be a workshop. I think with this many people on the line, we won't be able to have a ton of conversation during this. Certainly there's plenty of time for questions afterwards, but at a couple of points along the way, I will be asking for your thoughts and insights. So please do share. And just to keep everybody excited, there will be a cat video along the way as well. So that's what we'll be up to. So let me go ahead and start. So what is Capital for Climate? It's an intelligence platform for investors, large-scale investors, to navigate, source, and execute on climate solution investment opportunities at scale. And it's about really sort of accelerating that whole process. So the problem we're trying to solve is that we're not going to stay within 1.5 degrees with the current investment patterns. Right now, we're funding renewables like wind and solar to a large degree. Still not quite enough, but they're getting a lot of attention. But things like industry buildings, transport, food, nature-based sources, nature-based sinks are really getting underinvested in. And we're not going to make 1.5 unless we do that. So part of what Capital for Climate is trying to do is to illustrate the solutions within there that are actually investable today. If you look at this rainbow graph, this is science-based graph. As you can see, we need to get to net zero by 2050. At the end of the graph, we're never going to get the economy to be absolutely zero. So we need sinks as well. And right now, those aren't getting much attention either. So the opportunity is rather huge. Right now, there's $88 trillion, trillions, not billions, of dollars of assets under management seeking climate solution opportunity. This is about triple what it was 3 years ago. So it's incredible, the growth. It's unprecedented. Hundreds of financial institutions have made this kind of commitment, and there are tens of thousands of allocators' jobs that depend upon successful climate investment. We're talking about pensions, sovereign wealth funds, asset managers, ultra-high net worth individuals, and insurance companies. These are our target audience. So from the investor perspective, they are really feeling a lot of pressure. So one of the things we like to say is net zero is easy to say, it's really hard to do. They're having a really hard time trying to convert their climate mandates into high integrity allocations that are to get us to 1.5 degrees. There's just, the market's incredibly chaotic. There are hundreds and hundreds of different sites, hundreds of different sources that these people should be investigating. I'll show you a little bit later in a prototype. There are about 82 solutions that they need to be thinking of. It's really overwhelming, and these folks are super struggling. They're also having a sense that they're missing opportunity. If we're going to redo the entire economy in less than 30 years, you can imagine that there's huge opportunity. In fact, one of the huge risks right now is that you're not sort of investing in those opportunities, but they don't know where to find those. They have a feeling that there's stuff out there in their risk reward profiles and in the asset classes that they're interested in, but they don't know where to find it. And finally, how do we measure? Like, how do I know when I make an investment in something, what the greenhouse gas impact is going to be? How do I know I'm not engaged in greenwashing, wittingly or unwittingly? So that's what they're challenged with. So, in short, the market's really long on commitments. It's really short on market intelligence, and it's way behind on allocation. So our solution is about creating an intelligence platform that's going to now allow allocators to see the entire landscape of climate opportunity in one place, to get the noise out of the system and to provide a high signal to noise ratio, a highly curated set of content, so that they can build strategy and navigate and source and execute investments that are aligned to 1.5. We're also a little further down the line, we're going to allow allocators to measure the climate investment leverage. So for every dollar I'm investing, how much greenhouse gas am I getting out of the atmosphere? Right now, that's completely impossible. And it's making it really hard for investors to know what their impact is. To be clear, we're not focused on public equities. So trading, our view of that is, for the most part, this is just trading the rights to assets, right? The ownership rights. It doesn't get greenhouse gas out of the atmosphere. What does is primary investment in solutions, new solutions along those different areas that are going to get greenhouse gas out of the atmosphere, and that's going to move the needle in the real economy. So this is just a little break. I mean, while there are basic functions of a PM, my strong feeling is the product management field or role is so huge, and it can take on so many different aspects that it's really your personality and your values and your work experience is going to shape how you approach the role. So Fatty and Chi asked me to talk a little bit about myself to sort of show where I'm coming from, so you have a better idea of how I'm approaching this whole thing. So where to start? I started off as a system programmer at Stanford, and then I got a little restless, and I ended up doing a year of volunteer work in Central America. I came back, got an MBA, and then I'm the handsome guy on the left, the back left of that row, and the three guys to the left of me we ended up founding this organization called Context Integration, which was a system integration firm. And we brought sort of the new technologies, which at the time, back in 1992, was client server, and then a little bit later, commercial web. We brought that to Wall Street and to Silicon Valley. And we were actually quite successful. We grew it to about 500 people by the year 2000. And one of our, I think, competitive advantages was that we ended up being not really terrific managers. We didn't know that much about management, so we depended upon our employees quite a bit to provide us with strategic ideas. And so we actually got quite good at harnessing the energy and the smarts of our employees. I'll give you an example. I had an intern come into my office one day and said, "You should be using knowledge management." We had, at that time, about 7 offices across the country. And what we were doing was a lot of Black science. I mean, the Black arts, the client server didn't work. Client server didn't work the way it was really advertised to. We needed to do a lot of tricks. If we learned something working on Wall Street, it could be really useful in San Francisco or Houston or Denver. And the faster we could spread that knowledge around, the better. So I took the idea, we implemented it. Our clients really loved it. Our employees really loved it. And the whole notion of sort of the strategic conversations became a really key aspect of what we're doing. And by strategic conversations, I mean conversations between us as management and our employees to help shape our strategy. And we did that in a lot of different ways. So that really influenced me going forward. And we sold the company in 2002. And after that, I opened up a shingle called CBridge Partners, doing consulting. And it was really a period of reflection and action for me. Soon after I opened up CBridge, I got a call from PricewaterhouseCoopers. A former employee there was working with the chief knowledge officer, and thought, based upon experience, a context with knowledge management, they were really struggling, and they wanted to sort of help me to rethink it. So I spent a year with them doing that. I got a call from the World Bank afterwards asking for me to do the same thing with them. They wanted to rethink their knowledge management program. I got a call after that from UN OCHA, the Organization for Coordination of Humanitarian Affairs. They wanted to kick off a open data project around humanitarian data. And then I got a call from a friend who was on the board of the Clean Air Task Force, which is this fantastic policy and advocacy group around climate. And that was my first real exposure to the climate world. And then I got a call from another friend from this company called General Compression, which had a large battery storage product. And for both of those organizations, I helped them figure out sort of how to make their organizations work better, do some organizational transformation, and that worked out really well. I also, during this time, I also wrote a book, Strategic Conversations, talking about how even large organizations like, let's say, Pfizer, Best Buy, could use strategic conversations at scale, and then did some work at the New York Public Library, actually doing that kind of work, and wrote a Harvard Business Review article about that as well. Later, I got a call from Pivotal Software. You may be familiar with them. Some of you may be familiar with them and their Pivotal Labs. Their product management philosophy dovetailed really nicely with Strategic Conversations. And I joined that company working with their digital transformation team. And then opportunity came knocking. I got another call from a friend who had been an investor in renewables and been incredibly successful in that, has founded a merchant bank and a VC firm. And he made a good deal of money and wanted to give back, and he wanted to form Capital for Climate. And so he showed me this piece of paper that you're looking at now, lots of really great information. and he wanted me to help, to bring it to fruition. And so my first reaction was, okay, that's super interesting. What next? And so what next was, one of the things I always go back to as a product manager is user-centered design, always thinking about the end user. And I think one of the key lessons I've learned along the way is, doing good is never enough, that you always have to be thinking about the user to have a successful product. So as promised, I want to just show you a quick cat video that I've always played for myself before I started a project, just to get myself recentered in the sort of notion of user-centered design. And hopefully this would be fun and useful for you as well. So it's about 3 minutes.
You could optimize for video on the Zoom.
Let's see, how do we do that again?
There's like view options, or there's like a panel where you can optimize
More,
for.
that's right, optimize for, yeah, got it.
Yeah.
Thank you. That's what we were going to try to do before we started, but I think we're good.
When I design a website, I don't work directly for the people who are supposed to actually use it. In other words, as a user experience designer, I'm in the business of selling cat food. The cats are not my clients. They don't hire me. They don't know I exist. But the cats are the ones I ultimately have to satisfy. In the web world, satisfying the cat is called user-centered design. In the cat food world, it's called staying in business. The cats are Larry in Bakersfield and Melinda in Tulsa. The cat food is the site and every ingredient in it. The party who actually buys my cat food is the cat's owner, my client, the executives, the stakeholders, whoever is in the position to give me projects, approve my work, and set it out for the cat. Oh yeah, and there's one other player, the factory, that's the developers. As a maker of cat food, there are 3 big mistakes I have to avoid. The first big mistake is to put the owner first. Now, I need to tread carefully here. I certainly need to satisfy the owner too. After all, if the owner's not happy, everything grinds to a halt. But if all I do is give the owner or the factory what they want, with little or no regard for the cat, then chances are the cat's not going to eat the food. And if the cat doesn't eat the food, how long is the owner going to remain satisfied? How well have I really served the owner? What the owner wants and likes and thinks is very important, but only once we're sure we've satisfied the cat. The second big mistake for a web designer, a cat food maker, is to imagine that the cats are like me. I love strawberries and chocolate. Cats don't. They love mice. I don't. I'm not a cat, and neither is the owner or the factory. So our own tastes and opinions and agendas come in a distant second to the cat's. To be a good cat food maker, I have to absorb as much research as possible about what cats need and want and like. What I like is irrelevant. The third big mistake is to imagine that the owner or I can compel the cat to do what we want. Cats don't obey. They have zero interest in what we want them to do. The only way we'll ever get the cat to do anything we want is by understanding the cat's own motivations and skillfully playing on them by providing what the cat itself wants and needs. In the end, if the cat won't eat the food, then nothing else really matters. Sooner or later, the owner is going to have to either buy different cat food or lose the cat. The stakes really are that high. So as a designer of websites, I have to make jolly well sure that I satisfy the cat first, remember that I'm not a cat, and find ways to play on the cat's own motivations. Only then does everybody win. When I design a website, I don't work directly.
So hopefully that was a little bit useful. It was useful for me in the sense of, okay, who are the cats that we're talking about? I guess we're the cat food company, Capital for Climate. We want to achieve 1.5, but if we don't get our cats to play along and motivate them properly and play to their motivations, we're not going to succeed. So our cats, we defined sort of 3 key personas. One was the sustainability officer for the bank or the pension. This is the person who has been clamoring for years that the organization needs to do more, and now sort of feels like the dog that has caught the car. If you're at Wells Fargo and you're the sustainability officer, you've been yelling for years, and now you've got a $700 billion mandate to invest in climate. Good God, what do I do now? Another one is the CIO, the Chief Investment Officer, who has a very similar problem. And then finally, and probably most importantly, is the portfolio manager. These are the people that are actually making the investment decisions. And what are their needs and goals? I mean, they never have enough time. They're incredibly busy. They're getting lots of pressure to invest in climate, but they don't know how. They want something that's easy, an investment pipeline that they can actually work with. And they want to stand out in their field. I mean, if they were to be successful in climate investment, that'd be great for their careers. So with that in mind, we started thinking about what the system should look like. And we started asking the questions, or I started asking the questions, how do we know that this thing is useful, that accomplishes our goals, but it also addresses investor challenges? And how do we know it's economically viable, that customers will actually pay for it, and that we can build and maintain the platform cost effectively? And so I started off, building a prototype. And this is the first prototype we built. We call it P1. It's not really a minimal viable product in that it didn't really provide value to users. We couldn't really let it out of our clutches. It was just meant to sort of demonstrate things. It was written in Excel, and it cost about $2,000 to put together. It did help answer the question of whether there was user interest. Stakeholders got the idea pretty readily from it, but it was super primitive and it didn't necessarily delight people. So we ended up building a much higher fidelity prototype for about $25K. We called that P2. And then we built an incrementally better prototype called P3. And I'll take you on a tour of that because I think it's useful. And as I'm going through the tour, if you could, I'm going to ask you whether the prototype addressed all those questions that, all those risks that I just identified. So we'll spend a couple of minutes just talking about that. Yeah, so let me just do that. So this is P3. It's written in React, and the back end is a Sanity headless CMS. And let me just take you through sort of a little bit of the functionality, just to give you an idea of how it works, and then leave it at that. So one view we provide, and this is a view really for the sustainability officer and the CIO, is sort of an overview of all the solutions across all sectors that are investable today. And what we do is we ordered them in their potentially reduced greenhouse gases by 2050 in gigatons. So not surprisingly for most investors, wind and solar come up at the top. But what is super surprising for most investors is that things like reduced food waste, alternative protein production, nutrient management, health education of girls are super high in terms of their potential reduced greenhouse gases, pretty close to wind and solar. And if you show all 82 of them, it's about 1,500 gigatons. And so in that way, you see that wind and solar are just an important but not dominant part of the whole equation. The other thing that we did that investors are finding really useful is provide a bit of a heat map. So if you look at the estimated market size for onshore wind in 5 years' time, $146 billion, which is a ton of money. But what's been invested over the last 5 years is $344 billion. And it's a very similar story for solar. What this is indicating is that there may be some overcrowding in this market. And in fact, what we're seeing is that used to get 14% returns on this kind of investment. It's more like 6 and 7% now. Whereas with something like alternative protein production, there's the estimated market size in 5 years is $59 billion. What's been invested over the last 5 years is 4.8. So for a lot of investors, that could indicate alpha is possible. So you're making above market returns. And if you're in real assets or venture capital, you might get interested. So let's say you got interested in that. We take you to what we call our interactive investment thesis, which is, okay, what is alternative protein production? What are the asset classes that it links up to? So, VC, if I'm in VC, I might look at this. If I'm in, let's say, private equity, I might look at especially crops or feed production. What are the funds and vehicles currently investing in that? Really hard to do that right now. And we show these. What are the top companies? What are the top deals to provide proof points? Investors are always looking like, who's gone before? And so, what we show is that, there's actually some really great investment opportunities here, and you should get it on board quickly. So we're trying to create a little bit of fear of missing out. We also provide expertise location. So the notion here is, from John or from Sammy or from Rick, you can learn in a couple hours what it might take you 3 weeks to learn on your own. And you probably have more certainty after having spoken to these folks, because you read an article that's 6 months old now, it may be out of date. Things are moving so fast. We also have access to Innovation Center resources. So we're not trying to be the Google of this. This is like the 20 or 30 resources that an asset owner or allocator would be interested in. And once again, this is a highly curated, list. It's high signal to noise ratio. And finally, we're going to have a machine learning enabled feed. I'll show you what that means in a little bit. And then there'll be a facility for downloading all this information into a proto investment memo. So if an allocator needs to write an investment memo for its investment committee, we get them halfway there. The whole point of this is to telescope down the amount of time it takes for an allocator to come up to speed and to be able to make investment decisions quickly, and to start to invest in those areas where we really need that investment. Let me go back to funds and vehicles and just show you what the drill down looks like there. So we show what the manager experience, the number of funds, et cetera. What we do that, and there are other databases that do that kind of information, provide that kind of information. What we do that's part of our special sauce is do a portfolio X-ray. So of this fund, what are they investing in climate? So, and then how does that break down in the solution categories that I showed you earlier? So this one has significant nutrient management, some food waste, regenerative ag, a big plant-rich diet portfolio. So what we can say is, this is how it breaks down. What we can also say is, let's say you're a portfolio manager or your CIO, you've got $100 million invested across 20 funds. We'll be able to tell you of those, you've got $10 million invested in nutrient management. Overall, you've got $20 million invested in climate, and maybe you're overinvested in nutrient management. You need to sort of rethink that. So we can help you with sort of portfolio allocation and strategic asset allocation. But we can also tell you is how much greenhouse gas are you getting out of the atmosphere by your $100 million investment. Right now, that's impossible to do with anywhere else. And of course, for all of these, we have interactive investment theses. You can go to that. You can follow a fund. You can also follow solutions. Let me show you what that means. This is a machine learning enabled feed that we're going to develop. It's based upon your profile. So what sectors, asset classes, geographies you're interested in. It's also based upon the solutions and the funds that you're following. And so let's say you're interested in forestry, Southeast Asia, real assets. This would be, gather that information for you. It would tag it. You could tag it yourself. You can annotate it yourself. This becomes an individualized knowledge management system. Let me show you one other thing, and then we'll move on. This is a build your own test portfolio, and the notion here is, and as product managers, I'm always, I think we're always thinking about how can we provide value in a couple minutes, because a lot of users don't want to spend a whole lot of time going through. And what I just showed you was sort of a long way to get value. So here, let's have a portfolio manager. I don't know that much about climate. I'm not sure about capital for climate, but I know I have to make a $100 million investment. I need to do it in climate. Here are the sectors, asset classes, and geographies. Capital for Climate would then go ahead and build you, find you 4 or 5 funds, and show you, how much of that is climate related, and see if that makes and fulfill your mandate that way. Once you see what the funds are, you can just do what we just did, drill down. Okay, SDG has this. Here's the portfolio composition. It's got all this investment in food waste. What does food waste mean? I can drill down, et cetera, et cetera. So that's a quick introduction to what we did. So maybe I could open it up for just a couple of minutes. And, to what degree do you think that this prototype actually answered the questions that I was trying to answer earlier on? Maybe just spend a couple of minutes if anybody wants to volunteer. Hint, it didn't solve all of them at all.
Maybe you could just, as a refresher,
Sure.
remind us of the questions.
Yeah.
And what exactly were Capital for Climate's goals and the challenges? If you, maybe that's giving away too much of the answer.
Yeah. Anybody want to take a shot at it?
Hey, Bruce, this is Eric.
Yeah, hey, Eric.
Sorry, I have a company's global town hall running just in the background at the same time. Hopefully it's not distracting, but I don't know, I would almost wonder about flipping the question around to say, did your personas tell you or let you know that this is helping them accomplish their goals?
Yeah.
That's usually how I think about whether it has successful outcome or not.
Yep. And I would say that the answer to that was actually yes. They were quite happy with it, but there's still, you're on the right track. There's still a big missing piece, and I'll talk about that a little bit later. I think the other thing is, and I think it gets to, is this economically viable? It did address a lot of their challenges. Would they be willing to pay for it? Google is super interesting, super useful, and we use it every day. We don't really pay for it. And then the other question, can we actually build and maintain the platform cost effectively? Didn't get to that either. Let me go on. I see my time is actually, I'm going a little bit over. So let me just sort of jump through and finish. I will say that the good news is that the prototype really brought the platform to life for stakeholders, and it did help us secure the funding we needed to take the concepts further. And it got us the opportunity to build a fully functional and minimal viable product that we were able to present at COP. This is a screenshot from it. So we've actually raised enough money to really take the concept further. And as I said, this thing is up and running right now, presented at COP, and have gotten pretty good reception for it. So let me sort of sum up. I mean, sort of next up to Eric's point, we haven't really looked at the we've only cursorily looked at the value stream mapping for the investor. So what's the life cycle from concept to actually making the investment? I should say from strategic asset allocation thinking to actually making an investment. What does that look like, and where can we play within that? And can we play in a way that they would actually pay for that so that we maintain viability? The other thing that we sort of figured out is that it's really hard to get this content together. It's super time intensive. So how can we source and constantly update massive amounts of content on funds, solutions, initiatives creating this prototype and the nature-based solution minimal viable product made it clear to us that we need to automate much of this process through machine learning and other technologies. And these two things are the next two big things on my plate. So that's it. Where we've been, hopefully I was able to give you a good introduction to what Capital for Climate does, a little bit about me and how I came to the role, and how I manage the opportunities and challenges as the product manager. Some key takeaways, doing good isn't enough. Just like any other product manager, you have to create value for your stakeholders. Another takeaway is, you can accomplish a lot with a little. Our $2,000 prototype was super valuable in getting us funding and moving us forward. And then sort of related to that, product is power. And maybe this is just the product manager talking, but ideas are great, and we have some brilliant people who know a ton about investment, but their ideas are great. But whether it's a prototype or a minimal viable product, having those makes the concept super tangible. So that's it. And finally, I just want to extend my thanks to Fatty and to Chi, who were really super helpful in setting this up and super dedicated. So thanks to them.
Thank you. So thanks, Bruce, for walking us through your whole journey. We have about 10 minutes to kind of answer any questions. I know there were some questions in the chat, but before we go through the chat questions, is there someone that would? Yeah, I see Thomas has raised his hand. Would you like to ask your question first?
Sure, thanks. Cool. Thanks, Bruce, for the presentation. That was really interesting. You mentioned one of the biggest challenges at the moment is around investors assessing the effectiveness of their investment, both from a return on investment perspective, but also in a, I guess, not philanthropy return, but like a climate return on investment. I guess you mentioned here's the carbon impact of your investment. What are you seeing in terms of I guess the transparency and the authenticity of those investments in context of a broader sustainability perspective? An example of this would be planting a tree as a carbon offset where you cut down the rainforest. On the one hand, that tree represents carbon out of the atmosphere, but you may have in turn created an actual worse effect. So how is that being, I guess, calculated into investments and return on investment as fund managers or secretary?
Well, I mean, the sustainability officers, of course, are in part responsible for that, to sort of make sure that greenwashing is not going on. And carbon offsets have a great deal of potential. So think about nature-based solutions. Afforestation is reasonably well known. Mangroves are incredibly important, but how do you actually invest in those? How do you make a return on those? Right now, without carbon credits, that's going to be hard to do. So carbon credits are super important. They're also risky in terms of, as I think you allude to, they're risky in terms of reputation. They can be really easily misused. There's standards being developed for them now. There's a great paper out there now by a guy from CPI, and I'll put it in the chat when a little bit later. I'll find it on the carbon market and how to make that really effective, both from a supply side, but also from a demand side, right? So on the demand side, you can think about oil companies and all that are trying to use them. Are they using them properly? And on the supply side, are these carbon credits actually real? So it's a big challenge, but it's a really important, and it's one that's going to be able to. It's going to be super important for nature-based solutions, at least for the next 5-10 years.
Amazing. Thomas, does that answer your question?
Yes, it does. Thanks, Bruce.
Great. So we have a few questions from the chat, and we also have some questions from the registration form. So I'll just go pick the first question that came out. I guess a quick question. Richard was asking, where did when you're going to share the link with Thomas, could you also share the link of where you came, how you came to the $88 trillion of assets under management like number?
I'll have to, yeah, okay, yep. Yeah, we can do that.
And I think, actually, I think those were all the questions on the chat. We have some.
Let's provide a clarification on the AUM question. It's not that they are dedicating trillions of dollars to climate per se. It's that the organizations are worth trillions of dollars that have made commitments. So the commitments aren't necessarily 88 trillion. They're somewhat less than that, but the organizations they represent are that.
And I see in the registration form, Emily Stone kind of asked, would you have any advice for PMs who are looking to transfer their PM skills to the climate domain? It's kind of like a big umbrella question. Yeah.
Well, I think work on climate obviously is an awesome resource for finding those opportunities. There are a lot of organizations that need this kind of help. So I don't know if you have time to volunteer. That's a good way of getting your feet wet. I mean, that's what I did with Capital for Climate. I was still working for Pivotal, and which I'm sure if you're with the Oracle, you're well familiar with Pivotal. I spent probably about 4 months doing volunteer work and sort of helping them structure it and helping it think it through, and came up to speed a lot on climate finance. I mean, I was having a hard time really differentiating between asset managers and asset owners. What's the difference between those two? And then got the position. So I think there are a lot of people that need your skills, Emily, and the skills around this table. And a little volunteer work will really get you there, I think. At least that was my path.
Thanks.
Great. I am wondering, just checking on the audience again. Does anyone have a question before we pick up a question from the registration form? Okay. So we have a question from Eric. Eric asks in the chat, and I kind of like relate to this. It's like how might you articulate the value prop of sustainability to stakeholders when the cost of switching might be too high for them?
Well, it's interesting. The whole dialogue around this has changed over the last 3 years, radically so. It used to be that investors were really worried about lost assets. So think about you're really big into Exxon. Your risk is that a lot of that value is going to stay in the ground because it's got the policies. The sort of what's called the inevitable policy response will force Exxon to keep that oil in the ground. The conversation's really changed to what's the risk of not actually investing in the transformation of the economy that's going to happen in the next 30 years, a complete transformation, that we haven't seen since the industrial era or the information era. This is a whole different thing. So there's less talk about how do we sort of balance sustainability with profitability. Right now, they're pretty much going hand in hand in the heads of most investors these days. And if you think about, sort of the transition really started to happen when the head of BlackRock, Larry Fink, said that every investment that we're going to do, we're going to look through the lens of climate from now on, and not because we're do-gooders, although we want to be do-gooders. It's because it's the best investment strategy we've got right now.
Amazing. I think I found, I know what you're referring to. I actually want to share that link, but I'll share it in the Slack, because I think that made a lot of waves in the news. Yeah. Amazing. I'm going to switch off, turn off, stop